Updated the 28th of March 2018, 9:30 Australian Eastern Daylight Time. Australian shares are headed for a tumble, as a plunge in big-name technology stocks weighed down U.S. markets. The Nasdaq was the worst-performing index, falling 2.9%, while the S. As for the Dow Jones index, it lost 345 points, or 1.4%, to 23,858. It was only yesterday Wall Street had experienced its biggest daily surge in 2.5 years, over subsiding trade war anxiety. On the flip side, European markets finished sharply higher, closing before the U.S. sell-off, with London and Frankfurt gaining 1.6% as U.S.-China trade tensions eased, for now. Market players, getting worried. Analysts said the overnight reversal in U.S. stocks is concerning, given the strong rally just the day before. "Now I am getting worried," wrote AXA Traders chief market strategist Greg McKenna. "We have seen another dead cat bounce for U.S. stocks while U.S. 10-year treasuries are slipping down and through 2.8%. To me, it speaks to uncertainty and caution. It speaks to a little more money in cash and bonds, yes, even at these rates. It speaks to selling the rally, not buying the dip. It speaks to not feeling a rush to get to market to buy stocks when you get fresh money or a new allocation. In essence, it speaks to risk asset price deflation as traders and investors wait and see where things work their way to." Deutsche Bank's analysts say the immediate catalyst for the negative sentiment last night were fears of further trade restrictions by the U.S. on China. The selling appears to have been sparked by a number of factors, some stock-specific, but also reports, such as this one from Bloomberg, that U.S. Treasury Department officials are looking at ways to ban Chinese companies from investing in various technology sectors, including semiconductors and 5G wireless. They wrote, such a development would potentially also raise retaliatory risks for U.S. tech firms operating in China. Tech hit hardest. Facebook was one of the worst. It dropped 4.9%, as it continues to be plagued by the Cambridge Analytica data leak scandal. In the last fortnight, Facebook shares have plunged by more than 16%. Google's parent company, Alphabet, fell 4.5% after a U.S. appeals court resurrected a multi-billion-dollar copyright case brought against it by another tech company, Oracle. Tesla shares sank by 8.2% to their lowest price in almost a year, as U.S. authorities investigate a fatal car accident which occurred last week, after a Tesla vehicle crashed and caught on fire. In addition, Twitter sank 12% after short seller Citron Research said the stock was most vulnerable to privacy regulations. This was followed by consumer cyclicals, minus 1.73%, and financials, minus 1.65%. Australian market today. Australian stocks are set to follow the Wall Street slide, with ASX SPI 200 futures down 1% to 5,758, and the Australian dollar had fallen 0.9% to 76.75 US cents by 7:30 a.m. Australian Eastern Daylight Time. It also weakened considerably against the British pound, minus 0.4%, euro, minus 0.6%, Japanese yen, minus 0.9%, and New Zealand dollar, minus 0.4%. The US dollar advanced against LG10 peers overnight, amid a squeeze in bonds and a sell-off in the tech sector. ANZ's Daniel Bin said, "The Australian dollar underperformed and further weakness is possible, given it remains at the mercy of shifts in global risk appetite." Gold prices also fell sharply by 0.7%, as investors engaged in profit-taking over easing trade tensions.